Hey everyone, my name is Brian and welcome to Copycat Trading. I'm going to be making two videos in this little series, one of the fundamental analysis and one of technical analysis. And these are both going to be the basics, but they are good to look at and review for solid understanding of the two methods. And I'm going to, hopefully the goal is by the time you're done to have a good solid understanding of both of them. In this particular video, I'm going to show you the basics of fundamental analysis. Now, technical analysis and fundamental analysis are two very different methods, and if you're going to trade on your own, you will need to consider these two methods. I guess you don't have to, but there are some people who just put their finger in the air and they see where the stock price is going to go based on what direction they feel the wind. But if you're going to do anything other than just put your finger in the air to see which way the wind is blowing, one of these two or both will likely be what you're going to use. Now, there are other methods that people use to evaluate when to enter a trade or when to exit a trade, and I'm not going to get into them, but I don't want to discount them either. The market does act in predictable cycles, and some just do cycle analysis, and they invest based on predicting cycles of a market move. The market does move in relation to lunar events and solar events, and even acts according to the planetary and constellation movements. Some people don't consider them very scientific, but they can't be discounted, and some people make a bunch of decisions based on them. There are some that invest based on these patterns and cycles, and some that just use them as another tool in their tool belt. And one of my teachers used to say that the moon has a huge effect on the oceans, and our bodies are in large part water, so don't tell me that the moon cycles don't have an effect on our emotions and therefore the market movement. So he's looking at it more of a scientifically, but there are some people who just think of that as voodoo, and but some people use it as just a tool in their tool belt. They don't trade off of it, but there are other people who do actually trade off of it, and some of them who have been, they claim, quite successful. Today, though, I'm going to discuss fundamental analysis, and in the second video, I'll discuss the technical analysis. So I'm not going to get into how to perform these analysis, or too much in the weeds on how to perform them. But I'm not going to give you a lot of detail, but I will discuss them from a high-level view, if you will. Further videos will reveal more about the specifics, and I'm overall lean towards technical analysis, and I'll be talking a lot more about technical analysis than I will fundamental analysis, but I can't discount fundamental analysis. Well, before I get too far into the weeds, let's just start jumping right in and talk about fundamental analysis. Let's get into the definition here. Fundamental analysis, let me see if I can get it go to the next slide. Fundamental analysis is a method used to evaluate an asset's intrinsic value by examining related economic, financial, and other qualitative or quantitative factors. This approach involves analyzing the overall state of the economy, industry conditions, and the financial condition and management of the individual company in the case of stocks, or the economic or geopolitical conditions influencing a commodity or a bond. For stock fundamental analysis, it often involves delving into the company's financial statements. So if you're looking at the financial statements of a stock, you'd look at the financial statements and look at the revenue, the earnings, the future growth, return on equity, profit margins, any kind of data that would throw up a red flag or a green flag. For commodities, it may be involve looking at supply and demand factors, production costs, weather patterns, and political situations, in a specific country. In a bond market, fundamental analysis would typically include examining economic indicators like interest rate trends and creditworthiness of a bond issuer and things of that nature. The goal of fundamental analysis is to produce a value for an investor that they can compare with the security's current price, with the aim of figuring out what sort of position to take in the security, whether it be underpriced, that equals go and go buy it, whether it be overpriced, go sell or avoid it. Fundamental analysis is more commonly associated with long-term investing strategies rather than short-term trading. So before we go on in the slides, let's just take a look at an illustration of a fundamental analysis. Now, what I've got here is the Apple chart, and this is a Apple chart. If you've never seen a chart with these bars on them, these are called candlesticks, and they are representing what the chart has done as far as pricing, and this happens to be in a week, and I've got the week up here. I can switch over to day, I can switch to week, I can actually switch it down to minute and seconds and tick by tick if I want to. But this one represents the week. And what I wanted to show you here is where the iPhone was introduced. This is January the 7th, I believe, is when the iPhone is introduced. This is, again, by weeks. So whenever you're looking at this particular chart, you're looking at each one of these bars representing a week. Well, February the 7th is whenever the iPhone was introduced by Steve Jobs. And he introduced it here, and then the sales began, I believe, on January the 17th or January 10th. January 9th, I think, is whenever they started the iPhone. I'm sorry, June 29th. June 29th is whenever they started the iPhone sales. So right in here is when they started the iPhone sales. Now, you know what happened to Apple after this happened. The fundamental analysis could have started long before the iPhone was ever introduced. In the late 2000s, way back in the late 2000s, if I zoom way out on this chart, I can go back. There's 1999, there's 2000, starting right in here. In the late 2000s, particularly around 2007, 2008, right in this area, Apple was transforming, being primarily a computer company, to a more diversified consumer electronics company. And those of you of us that were around back in these days remember that there was the iPod, and I remember the sales that were coming from the iPod were just extravagant during this time. So they could be looked at as they were switching from computers, and specifically more from like the customer being business, into more of a personal computer. They were throwing out all kinds of colors that nobody else was coming up with. Everybody else was just kind of a black and white or gray or white type color, and Apple was producing all kinds of colors like lime green. I mean, it was a big hot item with college kids and things of that nature. But then they started switching to the iPod, which made them even more of a personal electronics company. So when the launch of the iPhone in 2007 happened, of course, that was a pivotal time in Apple's movement of their price. And for an investor using fundamental analysis would have examined Apple's strong financial conditions, including its growing revenues over this time, its robust profit margins, and a healthy balance sheet. And if you looked anything about the earnings back in those days, the earnings were just going up and up. Whenever Steve Jobs took over, he just did a fantastic job as a CEO, and the earnings were just going up and up. And you can see the price just starts climbing here, all the way even until 2007. Now, you see the price represented like 20 cents down here. This is after multiple stock splits that Apple has done over the years since this time. This is not actually the price of the stock back in 2000 or even 2003. This is the price of the stock after you factor in all of the stock splits that happened. So whenever we start looking at the stock price and we say, wow, it was $3 back in those days, it wasn't really $3. It was a stock. There was a stock splits that occurred and drove the price down, at least back in these days, historically down to $3. But whenever you look at these prices, you're saying, my goodness, look at that trend that goes up. These are from the fundamental analysis that happened back in those days. Robust profit margins, healthy balance sheet. Additionally, the analyst would have looked and evaluated the company's strategic position, their innovative product line, their brand strength, and the leadership under Steve Jobs. So somebody that's doing fundamental analysis is looking at all of the underlying support for this company. So the outcome of that would be those who recognized Apple's potential through this lens and invested in the company would have seen significant returns. Let me just zoom out here and show you. Look at that. As Apple stock soared in the following years, driven by success of the iPhone products and, of course, other products as well. But look at these cycles. Of course, the company went through cycles, but, I mean, after the launch of the iPhone, I mean, the sales just went like nobody's business. It just went crazy up. It's just amazing at what Apple did. And these are all evaluated from the fundamental perspective. Somebody could have looked at this and said, yeah, Apple's ready to take off. So it just takes a while to recognize it. So there are people that all they do is fundamental analysis. Examples are people that work in large hedge funds or mutual fund company, and let's say they work for a fund that invests in large cap tech stocks like Apple, Google, Meta, things of that nature. The analyst would read as many articles as they could about what the CEO does at different companies, what the CEOs at different companies do, and what they're doing on their personal time, what their personal lives are filled up. They will read about what a reviewer thinks of a company's product, and of course they will evaluate the financials of the company very deeply. They'll try to predict how many units are going to be sold over a given amount of time and what those units are going to be worth, things like that. We need people that do a fundamental analysis. They kind of set the tone for the rest of us. Like I said, they are primarily going to be working with big institutions, so they're going to be working with very large sums of money. And when you see Apple making these moves, these are the guys that move these markets. When they purchase or sell a company, that is when the company really has big moves. I mean, you're talking trillions of dollars that has flowed through this Apple stock price. And when you're talking that kind of levels, you're not talking about the individual investor. You're talking about people who have pooled their money together with an institution, and the institution makes those companies make those big moves. Institutions are like the sharks that swim in the ocean. And the individual traders, like myself, and perhaps you, are like the little remora fish or the sucker fish. We just swim next to the institutional traders and we just look to get the scraps. But those institutions are really involved in each and every company that they own stock in. All right, now I'm going to give you another example here, and I don't have a chart for this, but another example for this would be Enron. Okay, now Enron was a company that back in the 1990s and the early 2000s, one of the largest companies in the United States. The fundamental analysis on paper, Enron's financial statements showed strong revenue, growth, profitability. Fundamental analysis looking at these metrics might have considered Enron as a solid investment, and many of them did, based on its reported financial health and, of course, the market position. However, in 2001, it was revealed that how much of Enron's financial success was due to an institutionalized and systematic, creatively planned accounting fraud. This revelation led to the bankruptcy of the company and, of course, many, many investors losing a large portion of their portfolio because they were involved in it. Investors relying solely on reported financials without digging deeper into the quality and sustainability of its earnings were caught off guard. And, of course, Enron is now a word that everyone uses to describe companies that you should be careful of. So what I'm saying is that there is good fundamental analysis, but fundamental analysis can be flawed. Fundamental analysis can be flawed because it has to do with the analyst emotions as well. When you see a company's earnings come out and the stock plummets, okay, and let's just take a look at some of these, okay? When the stock plummets here, or the stock plummets up here, this is stock high, stock comes down real low. That right there is based on fundamental analysis. That's based upon what the individual or the market views as flawed fundamental analysis before this point. So somebody up here that with this all-time high at this point, of course, is $25.18. It's way much higher than that now. But let's just say you're sitting up here and you're the analyst and you're analyzing Apple stock, and whatever happens here, it was probably an earnings announcement, comes out and says something, and they guide and they say, no, we're not making near as many iPhone sales as before, but your fundamental analysis all through here said, yes, everything's good. You're going to say, oh my goodness, I bought the stock and the stock was supposed to be worth, 26. And I bought it down here thinking that we would go to 26. Now I'm going to have to sell. So you, as a fundamental investor, are going to turn back around and sell the company because you thought your fundamental analysis was true, but it wasn't. It was actually flawed. So the weakness in fundamental analysis, although it's supposed to be based upon objective data, much of fundamental analysis is very subjective, and it is performed in accordance to the emotion of the analyst. And if you don't know yet, you will find out, especially if you are getting into trading. Emotion is your enemy. So, for example, let's just switch over to Bitcoin. Example here, I'm going to go back over to the daily chart, and we'll just use the most recent time frame here. The analysis here, while Bitcoin was floating in this area, was that whenever the ETF came out, Bitcoin was going to the moon. We'd be going up to 60,000. We're right in here, and this is the Bitcoin price. This is the Bitcoin price that trades all the time, and so I've got a Bitcoin price here. And the Bitcoin was just chopping in this area right here, and everybody was waiting for the ETF to come out, and everybody said, hey, when the ETF does come out, man, I mean, it is going to go through the roof. And everybody thought we were going to hit all-time highs. And I'm just going to switch over, and I'm sorry this chart's so messy. I just got a lot of price. I'll tell you what, I'll just take everything off here. But here's the all-time highs way up here. And so they thought we were going to 100,000. They said if the Bitcoin ETF gets approved, what's going to happen is that we're going to go to all-time highs, and that we're not going to look back. Bitcoin ETF, or Bitcoin's just never going to look back once the ETF's approved. And so all the fundamental analysis that was happening in here was waiting for that Bitcoin ETF to be approved. And as soon as the Bitcoin ETF approved, all the emotion that was in here, the price spiked up here to 49,000, 48,000, came right back down to where it was. And it could go lower. So fundamental analysis, the flaw and the weakness of fundamental analysis is that even though it's objective data, it is based upon subjective emotions of the actual analyst. So you got to be careful whenever you're performing fundamental analysis that you don't allow your emotions to get in the way. Another example of somebody that would have subjection or subjectivity in fundamental analysis is someone who says this: the United States has so much debt, there's no way that we're going to be able to pay it back, and because of this, we're going to go into recession in 2023. And we heard that same thing in 2019, and in 2020, and in 2021, and 2022, and now it's 2024, and we're hearing the same exact thing about 2025. So people use, and every year that they predict these things, they just move it back a little bit more. And people went short the market based upon this emotion of this fundamental analysis. Yes, the United States has too much debt. And yes, it's going to be difficult for generations to come to pay it back. But that has been the case since the 1980s, since the 1990s, and the 2000s, and the 2020s. Here we go. And so far, the economy has not collapsed. That is the perfect example of emotion, subjectivity, affecting the fundamental analysis. And it very well may not be emotions. It may just be that the people that are doing the talking are trying to get attention. But it very well could be that the people who are listening are getting that subjectivity of the emotion of the fundamental analysis. So a lot of people during these times, whenever these speakers get up and they say these things, they get very serious. And of course, their seriousness makes a lot of us believe it. So a lot of people went short the market. A lot of people sold out of their 401ks because of flawed emotional fundamental analysis. Now, I don't want you to think that all fundamental analysis is flawed, but a large portion of the time, a lot of times, it can be flawed because of what the emotions look like. So that is the fundamental analysis. Okay. Now, in the next video, I'm going to introduce to you what is technical analysis, and you will see that it is significantly different than fundamental analysis. Not to say that one is better than the other. I'll show you just a few points of why I believe technical analysis is what I use on a daily trading basis. But I'm not going to say one is better than the other, but you'll see a little bit of a difference here. So if you found this video useful, please push the like button. And if you're watching it on X, please engage by putting in a comment below. And if you want to see more content like this, please subscribe if you're on YouTube, or leave me a comment if you're on X. And I will see you in the next video. Have a great day.